Okay, be honest with me. Do you absolutely love writing a check to the IRS every single year? No, you don't. I don't either. Let's face it, the most loathed payment that we as business owners make is that check to the IRS every year. We make profits that get us excited about reinvesting and growing the business, only to have our CPA hand us a monster bill to the IRS that needs to get paid no matter what. So, what do a lot of us do? We get our CPA to do lots of jujitsu tax tricks to get our payment down to zero. So here's the problem with that is, boy, that looks great. I don't have to pay any taxes. Woohoo! But there's a chance that you're going to get you back, bite you on the back on the rear end, because you might be thinking more tactically than thinking strategically. So the first thing we have to realize is that bankers and accountants are the dogs and cats of the financial world. They work at cross purposes. Your CPA is the hero when they can get your profits down to zero and you pay virtually no taxes. Woohoo, it's great. Look at that small teeny check to the IRS. But here's the problem. Let's fast forward to 5 years into the future, and you need that capital loan to expand your business, but you can't get funding because you're showing zero profit. So what happens? You have to find another source of funding that's probably a lot higher interest rate than you would like from your regular bank. Let me give you a real life story on this. I had a client who owned a high capital intensive company whose CPA always made sure to have as close to zero profits every single year. However, this made financing for new equipment much more difficult, and he had to pay higher interest rates to fund the equipment, which ate a lot into the cash flow of the business. And so I would look at this and I would see his interest payments and I would tell him, your profitability is being killed off by these huge interest payments every year. And he would tell me, well, I would have my client do all these tricks so that I have zero profit. But now you're basically going to have to go into financing companies that have double the interest rate of your local bank, and it's killing you in profits because you insisted on paying as close to zero taxes as possible. So let's take a look at 3 areas that we kill ourselves off on this idea of paying as close to zero profits as possible, and what's it affect our business. The first thing is Section 179. That's right, good old Section 179, where you get to deduct every ounce of a value of an item on day one rather than depreciate it over, say, a 5-year period. See, 179 is not always your best friend. So if you think about this, is that there's 2 problems with Section 179. One is that higher borrowing costs if profits are at zero, as we just talked about. But 2, it's a temptation to buy unnecessary capital equipment that has minimal impact on the productivity of your business. I'm going to give you another story. Had another high capital intensive company that I started coaching, and they had a $500,000 vehicle that they had purchased, and it was a pretty thing sitting in the showroom. And I asked the owner, I said, so he was bragging about the truck and all the wonderful bells and whistles on it, and my question was, well, tell me the productivity of this truck. How many jobs has it done? And the owner kind of for about 20 seconds sat there and thought and says, 0. I said, so why did you get it? He goes, I could Section 179 it. And I said, that's great, but it has to produce something of profit in the company to justify its existence. It can't just be a write-off, or you're going to have this thing hanging around your neck with with operational expenses that doesn't meet what it's intended to do. So the second problem with driving your profits down to zero, it's an invitation to an IRS audit. So you see, the IRS knows the appropriate typical profit level for your type of and age of your business. And when you consistently show zero profit over a long period of time, the algorithm that they use puts up a red flag and invites an audit that can cost you a lot of time and money. especially if you're caught using inappropriate tax reduction strategies. Nobody wants to have an IRS auditor show up in their business and start rummaging around through your financials. And so maybe you might just have to say, you know what, I'm going to have to write that check to the IRS because I don't want red flags showing up, and I really don't want an auditor in my office. The third thing is that it gives us the inability to purchase needed equipment. So you see, the purpose of profits is to reinvest back in your business. However, if you burn up all of your money in operating expenses, you'll have aged equipment badly in need of replacement and no ability to go out there and purchase the equipment. I'm going to give you another real life example. I had a client who was an excavation company, and he was really struggling in his business because he was just getting beat bid after bid after bid by this one competitor. And I told him, he's like, Kevin, what can I do? And then we talked about some strategies, but the biggest thing I said is, here's the deal. I know what he's bidding. He's bidding at or below costs. I said, what's going to happen is about 9 to 10 to 12 months from now, he's going to have to replace all of this equipment or start doing major repairs, and he won't have the money because he's got zero profits. Well, sure enough, at the exact 10-month mark, my client calls me up and says, guess who filed for bankruptcy? That was his competitor. And so he went through the whole zero profit thing, but when it came time to reinvest back in the business and needed capital equipment, he had nothing. So I know it's painful, but writing that check to the IRS tells us that we are making profit and we can reinvest back into our business. Now, keep in mind that when you do cash flow budgeting, always make sure that you set aside enough cash to pay that IRS bill instead of panicking because you don't have enough cash to make your tax payments. So it's important that you do your consistent cash budgeting, projecting forward, knowing that, hey, in 6 months, I'm going to have to be prepared to write this size of check. So I want you to do me a favor. I want you to, if you've got a challenge with zero profit strategies in your business, I want you to click below. I want to set up a 30-minute strategy session where I can help you figure out how to grow and expand your profits and still have plenty of money in reserve to make your tax payments. I want you to get out of that cycle of thinking that zero profits means that I am successful in business. Let's talk that through. And again, it's not going to be a sales session. I'm going to actually help you for that 30 minutes. And then after that 30 minutes, if you want to do another session to talk about coaching your business, we can certainly do that. But I want to help you get out of any traps that you've allowed yourself to get into because of this strategy. Go out there, make it a great day.